competition coming.
We've been told for months we've seen a tough environment in gaming. What do you make of the numbers there?
Yeah, it's interesting. For us, really, the future for Nvidia is AI, and that's where we're spending the most time. We do actually think that AI, as it evolves and increases the productivity of knowledge workers, will give people more leisure time. And much of that leisure time could be spent on gaming and other forms of digital consumption. And so certainly part of our thesis, but we really think the future for Nvidia is in AI.
Analysts have been forecasting $6.35 billion. So that seems to be really the thing initially here out of the gate that the market is keying in on. You can see the shares are rising 7% as we see a quick reaction here. If you look at the last quarter that the company's reporting, revenue falling as expected by about 21% to $6.05 billion. Earnings per share beating estimates by 7 cents at 88 cents a share. And the gross margin, important here, at 66.1%. The estimate was 65.8%. And that is a number that's going to be important for the market as well, as we have seen these sort of over-inventorying, supply gluts in the chip industry. The margins have been a number that people have been keying in on. Now, let's talk about the different segments.
Yeah, I think the big thing that people need to recognize when it comes to these large language models and generative AI, such as ChatGPT, such as Microsoft's Bing, and eventually Google's Bard, is that they're not, thinking or anything along those lines. This isn't the, sci-fi AI that we've been kind of built to expect, and through movies, obviously, not through these companies. And I think, a lot of people go into this thinking that that's what they're going to get. The reality is, I was talking to one expert who said these are basically, super, super advanced text predictors. So, when you're sending a text message to your friend, that's predictive text. That's essentially what we're seeing here. Yes, there are issues with some of the responses. To Microsoft's credit, they've been responding to those in kind by lowering the number of times you can interact with one of with Bing, whether that's 5 times a day or 5 responses per session, 50 times per day, 6 times, 60 times, and eventually 100 times per day. That's not what we saw when it was first revealed, but this is still in their kind of preview. So this isn't the final version that consumers will eventually get. I think, look, yes, there are clearly problems. To a degree, I've seen them on my own when, looking up different earnings data. I was looking up Nvidia earnings today, and it gave me the wrong year for the earnings result that I was looking for. So, there are problems, but I do think they will be worked out. I don't think this is, though, the end-all, be-all of AI, and I think anybody will agree with that who follows the space. And yes, there's a lot of hype of it, but around it, but this isn't the ultimate destination of where AI is. Right? This is ChatGPT. It can come up with unique content, but it also has information from the web and information that the Chinese government doesn't want people to see. So, it was just inevitable that ChatGPT and similar technologies from at least Western countries would be banned in China. So now they have to develop their own means of, processing large language models, which, there are companies that are able to do that already. But to really get into the generative AI space, and, they're certainly working on those capabilities. It's just that now, all of the spotlight is on ChatGPT.
The company's going to have employees rotate in office days to avoid desk clashes. And it comes as parent company Alphabet continues with other cost-cutting measures, including job cuts. Google, of course, it's a huge company, right? It has a lot of cash on hand, has a lot of revenue. And so maybe some people are sort of questioning this move. I don't think it's so bad. What do you think?
No, I think the bottom line is we have way too much real estate, corporate real estate, not only in the city, but elsewhere throughout the United States, throughout the world. I think companies are really dialing back, not only on new leases, but also reconfiguring and reconsidering their existing layouts. And we're a case study in this, I would think. It took us 2 years to get back to the office. Very happy to be here now, but I would say it's kind of inconsistent outside of our core team here. We're in the office every day because of studios. Not everybody's in here every day. And so why can't we share desks? In fact, most of us are actually doing that right now.
Yes, know if these political predictions and therefore implications for the debt of the United States, which is, of course, the bond market, are going to be true or not.
Yes.
But
You got to wonder. So a couple different places that could come from. Is this some A-list celebrity from Hollywood just spouting out political views? No. But is it possible he's talking his book? Absolutely. So, you know, if there's money involved, you question the motives of somebody. But is he talking his book in a way that's being disingenuous? I don't think.
We have rising interest rates against these valuations. A terminal Fed rate yesterday was up at 5.35. I'm skeptical that it's going to get there. I think that in spite of the fact that inflation is going to be reluctant to come down, I just think the shape of the yield curve is the best indicator of the forward economy. People are always asking me this question, how bad the recession is going to be. It doesn't matter. As long as we're going into recession, you have to have a certain degree of protection. We have not been very good at articulating a stance on Taiwan, except off the cuff, President Biden has said we're going to defend Taiwan. I don't think we have the ability to do that. Where are we going to get the money from? We don't have
money. But most of it is in the private sector. It's in Jeffrey Gundlach's bank account. And one of the things that I think you can bet on if we were to end up in a war over Taiwan or a war with anybody is we would raise taxes, and we would start by raising taxes on the wealthy. Now, that does not mean that we could necessarily win a war with China over Taiwan. I mean, that is a real problematic thought exercise to see how that would go. It would be a complete mess, without a doubt.
He also talked about the implications of the Ukraine war for a potential Taiwan conflict, not just in terms of running out of money, but in terms of weapons that we're sending over there, depleting our reserves. I mean, like, do we have a dearth of tanks now because we're sending them to Ukraine?
So Jeffrey Gundlach is not going to get appointed Secretary of State anytime soon. He made some good insights, but I think he's also completely overlooking a couple of things. For one thing, we are getting something for the money that we are providing Ukraine and for the weapons we are providing Ukraine. Guess what we're getting for our investment there? We're getting the rapid degradation and perhaps near complete degradation of the conventional Russian military. Guess what? Guess why we have an $800 billion defense budget? I mean, we have a couple of large adversaries in the world, and Russia is one of them. And for the, I think we've committed something like $100 billion to Ukraine so far. A lot of that is future spending that has not gone over there. Guess what that $800 billion in defense funding per year is for? It is for countering Russia and China and some other countries in the United States. So guess what? Ukraine is fighting this war for us. All we have to do is send weapons and some money, which we have. That is why that funding and why those weapons are there. So I think that is actually a terrific investment by the United States that is yielding much higher return than if we were not giving the money.
Well, you're my personal nominee for Secretary.
Jared, and that's exactly the story here with Alibaba, that it used to be a company that was all about growth, a lot about spending, and now they have really been cutting their costs. And that's what the street likes to see. So profits were up 69% year over year. Now, this is mainly because of these cost-cutting measures. The company did away with more than 4,000 employees last year, and CEO Daniel Zhang said Baba will focus on profitability and long-term growth. That's music to Wall Street's ears. Cloud revenue was up 3%. We have seen a slowdown with its cloud revenue unit. Cloud revenue continues to be a core business for Alibaba, and Chinese commerce was up 1%. Now, the CEO said that he has seen overall weakness in 2023, but is seeing momentum when it comes to consumption in China as China reopens and recovers. Now, Alibaba is competing with Pinduoduo and also with JD.com, and we saw that report earlier this week that JD.com is planning a subsidy program. Now, the CEO sort of shrugged off this, basically saying, look, no player can achieve a turnaround on subsidies. You need innovation, guys.
And I would like to equate it to say, Moderna was the little shop, like a lemonade stand, kind of funded by mom and dad, aka the US government, and now it's growing up. It's got bills coming in, it's got a lot going on, more products in the pipeline that it's working on, and we are starting to see some of that growth. So let's talk about earnings first. Full year looking at 19 billion in revenue, but missing with a drop in earnings as well as profits, really taking a hit just because of some of those bills that came through.
First of all, I love that you said that the outlet business is alive and well. It is. It's interesting. The narrative on the outlet business is these shopping centers that are quite a drive away with value-priced goods. For us, the outlet center business, we've moved much closer to the cities. We're building a shopping center right now in Nashville, Tennessee, which will open in September of this year, 12 miles outside of Nashville. The outlet retailers are really changing and evolving. A lot of new brands are getting into the business. So what you might have seen 10 or 15 years ago has completely evolved. Direct-to-consumer brands, better food and beverage offering, and even entertainment offerings, better amenitized space, so that when you come and you shop at one of our shopping centers, you want to stay for a much longer time.
Finance trending ticker page. Alibaba in the red following third quarter results. The company now seeing the hype around artificial intelligence lift demand for cloud computing, though also seeing reports of ChatGPT and similar apps being blocked on Chinese social media apps, keeping an eye on that story and seeing what that does for the growth of the industry. Also seeing Nvidia there after a top and bottom line beat, enjoying gains there of more than 12% heading into the noon hour. And we're seeing Moderna there under some pressure at the moment, down more than 8%, almost 9% there, as we're keeping an eye on that as well. Let's also do a final check of the markets before we go. It's been oscillating all over the place today, but still just slightly in negative territory. They're off some of the lows of the day, but the Dow there down about 200 points, about 0.6%. The S&P there also under some pressure, down about 0.5%. And the tech-heavy Nasdaq, a similar story there, also down just over 0.5%. Well, that does it for now. I'm Rochelle Akufa, but I will be back at 11 a.m. Eastern tomorrow. I'll see you then.